Welcome to the Chrisman Commentary, daily mortgage news podcast. I'm your host, Robbie Chrisman. Topics on today's episode include what's going on in Texas, my interview with Polunsky Beitel Green's Marty Green on the latest GSE IPO news, mortgage law in Texas, and let's go through a little primer on why we're seeing yields rise. Obviously, every company wants seamlessly integrated best-in-class solutions, optimizing every stage of the loan cycle. That's exactly what ICE does. As the standard for innovation, artificial intelligence, efficiency, and scalability, ICE is the technology of choice for the majority of industry participants, defining the future of homeownership. To see why innovation happens at ICE, visit mortgagetech.ice.com. Here in Texas, Austin, Texas, whether it was the Texas Women Mortgage Bankers Fall Social with Faith Schwartz and Elena McCargo last night, or the TMBA's Housing Summit speakers today, no one is ignoring anything. No lender can ignore the shutdown. And anyone who believes that residential lending and politics at all levels don't overlap is mistaken. Look what's going on with FHA, VA, Ginnie Mae, IRS information, USDA, and flood insurance. A topic at this summit, as well as other conferences, is mergers and acquisitions, and Carrington News was big news yesterday. I'm going to try and talk to a couple of their executives here today about just how it went down. But let me go back to yesterday briefly. We learned yesterday that the contraction of manufacturing activity grew more widespread in October as the ISM Manufacturing Index sank to 48.7, extending the factory slump into its 8th consecutive month. Meanwhile, consumer sentiment has declined for 3 consecutive months as concerns about future income and job prospects rise. Pending home sales were flat in October as affordability issues and broader economic uncertainty keep would-be buyers on the sidelines. Retail demand strengthened in Q3, driven largely by e-commerce but also improving brick-and-mortar sales, supporting forecasts for a rise in holiday spending and continued consumer-driven growth in the retail market. And I should address this too. I'm sure there's plenty of you that have asked, or been asked, why mortgage rates haven't dropped after the Fed rate cut last week. In fact, bond yields have actually risen over the last several days. So why are yields rising? Well, since we're in Texas, I brought in Prime Lending's Andrew Stringer, who said, let's identify the supply. Big companies are borrowing money. Tech giants are seeking ways to fund their AI infrastructure. To shore up funding, they often sell treasuries to buy corporate bonds. More supply equals more selling pressure. There are no buyers in sight, and with investors flying blind due to the data disconnect from the shutdown, confidence is low. Buyers are hesitant to step in amid the momentum shift toward selling. It feels a bit like trying to catch a falling knife. Fewer buyers equals more sellers, and even with the delay in economic reports, the broader market still believes the economy is holding steady. Jobs may be cooling, but spending and growth remain solid. This gives the market pause as the Fed may opt to skip a December rate cut. That means more pressure on bonds. Perhaps our biggest takeaway from the market is this: cranky traders make bad rate sheet prices. End quote. Thanks, Andrew. For today's interview, I wanted to welcome back to the show Polunsky Beitel Green's Marty Green to discuss the latest GSE IPO news, the current regulatory environment, and yes, mortgage law in Texas. Marty, I'm not sure where we should start, but maybe GSE reform is a good place. What's going on there?
Of course, we're just trying to decipher tweets at this point. We don't really have anything concrete. But it was interesting to me that one of Pulte's tweets recently said it's the president's choice what we do. And then I think he said, if anything, or something like that. So it seems to be almost introducing the possibility that they might not do anything, at least in terms of bringing them out of conservatorship, that they might decide the timing's still not right or something. I don't know. I thought it was interesting, though, that he had that, and it was in all caps.
Well, then it sounds like maybe Mr. Trump wrote it himself if it's in all caps. But
I know.
how do we, so now that you've had a couple days to digest that tweet that you're specifically referencing, if you were a betting man, are you thinking, oh, wow, Fannie and Freddie might not be public before midterms? Has it changed timelines? Has it changed think about it in a binary sense of public versus private. Has it changed even, that dramatically based on this tweet? What's your takeaway now that you've been able to process?
One of the things that I think is interesting about it is that it it does to me sort of say that the timeline might be more elongated. And one of the things that occurred to me, and this is something that I think you may have noted as well, is we're obviously seeing some changes in terms of the personnel there. The CEO left in the last week or so. We also saw Barry Habib that was appointed to the board a while ago, I think in July. And one of the things that he has been charged with doing is looking at loan level price adjustments to see whether or not that is a way that they could potentially change the way those are being implemented in a way that might lower interest rates. So one of the things that occurred to me particularly is that they have tried to put some pressure on the Fed to lower rates. The Fed has actually lowered rates, but what we haven't necessarily seen is mortgage rates necessarily fall at the same pace. And so by keeping them in a conservatorship, I think they have probably greater control of those kinds of things in a way that might make them more comfortable being able to potentially provide some interest rate relief to purchasers or others in the Fannie Mae, Freddie Mac world. And that might be more valuable to them than necessarily them exiting conservatorship more quickly.
Yes, and this is all, it flies in the face of what's been happening. There was momentum around
Mhm.
GSE reform, at least from a tweeting perspective. I maybe tweets are reality. Where do we go from here? Are we hinging on the next tweet? Are we hinging on the next Truth Social post? Is that the best way to look at it?
Well, I think there's one way of looking at it is yeah. I mean, I think look. We need to understand all of this is fluid. I actually think that the one thing that actually did slow everything down in terms of all of this is the government shutdown. It's hard to sort of imagine how you would sort of get in a position to do an IPO really quickly when you don't have people at the SEC and other places that you probably would need to have at least some preliminary meetings with to kind of get this thing sort of moving along. And plus, there's coordination with Treasury and other things with respect to that as well that also have to occur. And while many of those people may still be in place, many of them are not in terms of maybe people who are doing the research, writing reports, and doing other things that might be necessary as part of the process. So I do think the government shutdown has slowed things down. I don't think there's really been a consensus as to really what they want this to look like yet. And absent that consensus really coming together, I think that they're going to take a little slower pace in terms of getting things done. And if it's after the midterms, they may be okay with that.
You and I have spoke on the procedural aspects of this before, and I had alluded that if this goes into 2026, then it can kind of be a kick the can down the road because the midterms are coming, and Democrats might say, well, let's do everything we can to stall until after the midterms. Maybe we'll regain some control of part of government. But are we at the point procedurally where it's President Trump decrees something and it basically happens, and so this will either happen whenever he wants it to, and Congress can't necessarily do much about it.
Well, I guess there's a couple parts of that. One is I don't think anything's going to happen here until Trump's ready for it to happen. That's the first thing. The second thing is I do think that this administration has taken a more expansive sort of view of executive power in a way that they might ignore congressional will with respect to it, particularly if I think it's the best case for the Democrats would be that they might gain enough House seats to have control of the House, but I don't see a path where they would have control of the Senate. And so, best case for them is that. So you'd have divided government at that point. And I think the administration, even with control of the House and Senate, has kind of ignored a little bit of congressional prerogative with respect to it. And I don't see that changing. I think that they're somewhat emboldened by the fact that they've been successful at doing that in a number of turns. And so I don't see them necessarily, no matter what happens with the midterms, really taking a different tack going forward.
Just completely shift the conversation here a little bit, and I want to talk about mortgage law in Texas. For people that aren't intimately familiar, what are the differences between mortgage laws in Texas and the rest of the nation?
Well, I think obviously our focus is primarily on Texas, although we provide legal support for entities in other states and operations in other states as well. But Texas is just fairly unique in a couple of ways. One is our homestead laws are quite different than they are anyone who's sort of operated here versus other states certainly understands that very quickly. The complexity of those rules and the difficulty of navigating them sort of necessitates having legal counsel. And then there's also some a provision of the Texas government code that requires lawyers to be involved in document preparation piece of it, for instance. And so that is to protect consumers, but also I think that lenders who have operated here for a while have seen the benefit of that involvement by lawyers in helping navigate what's a pretty complex sort of group of laws surrounding homestead and residential lending in general. So it helps navigate that more smoothly for sure.
What have kind of top of mind issues been for your clients? And we can stick to Texas because I'm pretty interested in it. And you and I actually haven't unpacked that really before. For Texas lenders, right? What are some big things that have their focus?
The complexity of our home equity lending laws are one of the things that's very difficult for folks to sort of navigate. And in term, I mean, I don't think otherwise. I mean, it's what's interesting about Texas. I think Texas is really kind of unique in that it is regulatorily light in some ways. I mean, I don't think we have an overly aggressive regulator. I think the Texas Department of Savings and Mortgage Lending and the Texas Department of Banking and the Office of Consumer Credit Commissioner, who kind of regulate that lending piece of it in Texas, do a very good job of regulating it in a way that's very sensible. They're not overly aggressive in terms of things. So you have that background where you don't have an overly aggressive regulator, but you do have a pretty robust group of laws sort of that you have to still navigate. So it's kind of a weird conundrum in that sense, in that you don't have to worry about the regulator slapping you unnecessarily, but you do have a minefield of rules that you still have to navigate. And I think that's where people kind of struggle a little bit.
Any advice you wish you would have been able to give your younger self when it came to working in the mortgage legal field or in Texas specifically, or pretty open-ended question.
I guess that's a question that all of us who've been in the industry for a while have to kind of ask ourselves, because I think if we knew what the journey was going to look like, we might have chosen a different profession in some ways, because it certainly has been a rocky road when you look at it just in terms of the ups and downs and the things that we've experienced when you go back to '08 and what we saw then and what we saw with, just the every few years that you have a refinance boom and then you have a bust, and you have a refinance boom and then you have a bust, or then you have the financial crisis, and then you have the things with the pandemic and other things like that that are just tough to navigate. I think that's one of the things that I think is difficult, is that there's such a feast and famine environment, and that's something that I kind of wish that we found ways to navigate better, both as an industry, but perhaps also just as a country. Because I do think it's hard to navigate, and then it's really difficult when you see the human costs in terms of people who end up losing their jobs that worked very hard during the times when times were good, but just necessarily in order to survive, companies have to make tough decisions. And so I think that's what's really hard to watch and hard to sort of be a part of, but it's just sort of a necessary part of the industry given our ups and downs.
Yeah, I saw Mr. Idziak at the MBA annual
Mhm.
conference, and my sense leaving that conference was a lot of the doom and gloom that pervaded the industry the past couple of years has now kind of melted away. And hope springs eternal in this industry, sure. But as you look at it, sure, we've been through some trials, certainly
Mhm.
over the last several years. Are you optimistic things are picking up? You feeling good about where the industry is headed, or is it's now is as uncertain as ever with the regulatory environment and potentially being at the whims of one man in power?
I would say from a regulatory standpoint, I think people feel pretty good about where we are, because I do think that the CFPB being kind of a sort of a global thing that sort of everyone's afraid of, at least in the short term, that's not really as big a concern. So I think people are optimistic with respect to that. I think overall, in terms of where we are in terms of this cycle, I think the worst case is that we're kind of at the end of the bottom, if you will. But what I'm seeing out there, and what I think most people are feeling, is some pretty good optimism about things improving. And you're seeing with rates down, I'm hearing from clients that they're having kind of record lock days. But what's been interesting about it is this has been such a sensitive interest rate environment that it doesn't take much movement one way or the other to either juice it really significantly or to kill it really significantly. So the same client that will be telling me about a lock day that's been just a record lock day today I'll talk to them next week, and what they will say then is that, well, it was weird. It just sort of died. The next 2 days were much lower than a normal lock day. So it's a little bit uneven still. I think that's what we should expect. But I do think there's some signs for optimism in terms of the overall rate environment improving. And I think people getting used to where they are, and then people being willing to make the jump into buying a property where maybe they were a little more reticent 6 months ago.
Yeah, I had a capital markets expert on the podcast last week, and we were talking about what would it take for spreads to do this versus the yield curve doing this with certain Fed action, where will rates be in a year? And he was basically like, I don't think rates are going to be that much different in a year, but his prediction, and I'm loath to make people speculate, but I guess I make everybody speculate, was that they'd be a little over an eighth below where they are now, maybe moving toward a quarter. And if that's the case, we have then just hit that cusp of prevailing rates are at least 3/4 of a percentage point below where they were when a lot of borrowers bought last year, which
Yep.
means that the refinance boom lit, however you want to put it, could be coming to fruition, and that could be a huge boon for the industry. Also, yeah, I think the sentiment has shifted out there where it's, hey, the rate environment is a little more favorable. This is just to Joe borrower on the street. Rate environment's a little more favorable. I'm up for looking at buying a house again, at least before bidding wars start anew. So
Right.
a lot of good stuff there.
Yeah, and I think that an interest rate that starts with the 5 versus starting with the 6 just feels different, even if it's not that different in terms of what the payment amount is.
Yeah.
And so it doesn't take a lot of rate improvement for us to get there. If the Fannie and Freddie was to give some relief on some loan level price adjustments, you could get there pretty easily. You could, look at the end of the day, they could decide that the GFE and other things there could be adjusted downward to help affordability, at least in the short term. Maybe it's limited to purchase transactions or something like that. But there's some levers that they have the ability to do, particularly while this is still under conservatorship, that could be meaningful in terms of moving the rate and making it more conducive to people purchasing. And so I think that's one of the things that maybe the administration might be looking at, and that might potentially delay their willingness to sort of
Well,
put
this
things
I'm
on.
I'm I'm laughing over here because I don't want to open this can of worms, but President Trump has wanted lower rates, and it was, hey, well, is he going to be able to install enough loyalists on the Fed to be able to get them to cut rates? That didn't quite materialize. Maybe he could force the Fed in a different way to buy mortgage-backed securities, and that would help lower rates. That hasn't materialized. How about we just shut down the government and get rid of a lot of jobs, and that'll do enough for the economy and soften the labor market that rates will come down. So it seems like he's going to get his wish one way or another. I just no comments on that, please. We'll save that for a different day.
I think that's best.
Yeah, exactly. So let me close with this. You are a frequent, regular panelist on Mortgage Law Today, a Chrisman Commentary show presented by Polunsky, Beitel, Green. I just want you to talk about what it's been like being with some of the best and brightest legal minds in the industry and talking about poignant issues and what you've enjoyed about that.
It's always a great conversation. Brian Levy does a fabulous job at sort of moderating it, and it's just always interesting to see the insights of all of these great experts. So I'm humbled to be a part of it. It's always been a pleasure to join them, and the conversations have always just been really, really interesting. So looking forward to continuing that, and thank you for everything you do to make that podcast happen, because we've enjoyed being a part of it.
Very cool. Yes, that is on the third Tuesday of every month at 12 p.m. Pacific, 3 p.m. Eastern. People should check it out. Marty, always a pleasure. I love having you on, and I'll see you in Austin.
Sounds great. Appreciate you having me on again, Robbie. Talk soon.
Due to the government shutdown, the September trade deficit, factory orders, and JOLTS job openings will not be released today, which leaves Redbook same-store sales as the only data point. The lone Fed speaker is Vice Chair for Supervision Bowman, and outside of the Fed, the Royal Bank of Australia will be out with its latest monetary policy decision and is expected to hold the cash target rate steady at 3.60%. We begin the day with agency MBS prices, little change from Monday's close, the 2-year yielding 3.58 and the 10-year yielding 4.09 after closing Monday at 4.11%. Let's wrap up with a joke and some housekeeping. A man calls the First National Bank of Texas. The automated voice answers, "Hello, how can I assist you today?" The man replies, "Withdrawal." The automated voice says, "Yeehaw, how y'all reckon I can help?" Just remember I went to college here before you think I'm making fun of these people. Thanks again to ICE for sponsoring this week's podcasts. As the standard for innovation, artificial intelligence, efficiency, and scalability, ICE is the technology of choice for the majority of mortgage participants, defining the future of homeownership.